What is up guys, my name is Ignas, welcome back to the channel. Last week I compared several names from the freight industry, and after that comparison added into an existing position FedEx ticker symbol FDX. But this week I again want to check into another industry from the industrial sector to find out if my pick is worth holding on to, or if I should be going for another dividend paying name from the same industry. So the industry we are taking a look into today is farm and heavy construction machinery. And from there I am already holding Caterpillar, ticker symbol CAT. I now have 1.39 of a share at an average buying price of $172.48 per share. This position is now worth $268.76, meaning that I'm up for $20.76 on it, higher for 11.98%. Caterpillar now takes 4.16% of the portfolio, and that is 35.96% of my exposure in industrial sector. So let's see if it's worth adding more into what I already picked, or if we should be changing for another name entirely. So as mentioned, I have 3 names for today's comparison, with the largest being Deere & Company, ticker symbol DE. This year the stock has been doing decent, it is up 10.97% on the year to date. And zooming to the last 5 years, it was quite great, with the stock going up for 191.57%. Company's market cap is at $117 billion US, and the stock is trading at a dividend yield of 1.16%. Now we already know what the second largest pick is, which is Caterpillar, ticker symbol CAT. It wasn't performing that well this year, minus 6.76% on the year to date, but if we zoom out to the last 5 years, it did go up higher for 40.06%. Company's market cap is just a bit under Deere's at $102 billion, and it is now trading at a dividend yield of 2.49%. So these two were the largest and most popular names, but I do have a smaller heavy machinery stock to put against them. So the third one is PACCAR, ticker symbol PCAR. On the year to date the stock is just a bit up, plus 3.41%. And there was some growth in the last 5 years too, with the price going higher for 27.31%. Company's market cap is a few times lower than the previous two at $31.8 billion US, and it is trading at a dividend yield of 1.62%. So these 3 will be the names for today's dividend comparison, and in order to make that happen, let's go to Google Sheets. So we are now in my Google Sheets document, and the tickers for each stock are in. For the comparison to work, we'll check 5 different metrics: dividend yield, dividend payout ratio, years of consecutive dividend increases, 5-year compound annual dividend growth rate, and the current dividend yield compared to its 5-year average. For each stock, we'll take the number under each metric and then compare them in between. The stock with the best metric will get 1 point for it, then we'll sum the results up for each ticker, and in the end the stock with the most points will be considered the winner of this dividend comparison. I hope that the rules were clear, and a little thumbs up would be greatly appreciated, and with that out of the way, let's begin. So the first metric we are comparing is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. Deere is currently paying an annual dividend of $4.52 per share, so at a share price of $389.51, that is a dividend yield of 1.16%. Checking Caterpillar, their dividend is at $4.80, so at a price of $193.59, we here have a dividend yield of 2.49%. And now PACCAR, their dividend is $1.48, so at a price of $91.66, we have a dividend yield of 1.62%. The second metric we are taking a look into is the dividend payout ratio. The percentage here shows what part of company's earnings are being used to pay dividends. So for Deere, the dividend payout ratio is now at 17.33%. This means that just around 1/6 of company's earnings are being used to pay dividends. Now Caterpillar, and they have a payout ratio of 34.81%, so 2 times more than Deere, with 1/3 of earnings being used for dividends. And now PACCAR, with a dividend payout ratio of 19.14%. So here 1/5 of company's earnings are being used for dividends. Now the next metric is the years of consecutive dividend increases. So for how many years the company has been increasing dividends for at least 1 quarter every year. In Deere's case, they have been increasing dividends consistently for the last 2 years. Now for Caterpillar that is way better, as they have been increasing dividends consistently for the last 29 years, and then PACCAR is in between the two, as they have been increasing dividends for the last 10 years. Metric number 4 is the compound annual dividend growth rate. So for the dividend growth percentage, we'll use the 5-year average including the next year's estimate. Now with Deere, the 5-year compound annual dividend growth rate is at 10.53%. Switching to Caterpillar, and their 5-year growth rate is at 7.39%. And lastly, PACCAR with a disappointing surprise, where their compound annual growth rate is in the negative at minus 14.08%. Now for the last metric, we'll be comparing the current dividend yield and its 5-year average, and for that we'll use my dividend investing watchlist on Google Sheets. So we are in the tab for Deere, we have its dividend yield history for each quarter of the last 5 years, and on average the stock was trading at a dividend yield of 1.48%. So the best time to get into the stock was back in 2020 at a dividend yield of 2.14%, over the 5-year average for 45.01%, and the worst one was in the beginning of 2021 at 0.85%, under average for 42.4%. But if we would be getting into the stock right now at a dividend yield of 1.18%, that is still quite there under the 5-year average for minus 20.04%. So this is here that number that we will be comparing. Now let's take Caterpillar, we have its dividend yield history of the last 5 years, and on average the stock was trading at a dividend yield of 2.37%. So the best time to get in was in the first part of 2020 with a dividend yield of 3.5%, over average for 47.5%, and the worst one was in 2021 at 1.78%, under average for 24.98%. But if we would be getting into the stock right now at a yield of 2.52%, that is actually a bit over average for 6.2%. Third one is PACCAR, we have its dividend yield history of the last 5 years, and on average the stock was trading at a yield of 1.65%. So the best yield was back in 2018 at 2.22%, over average for 34.62%, and then worst one in the beginning of 2021 at 1.37%, under average for 16.92%. But if we would be buying the stock right now at a yield of 1.64%, that is pretty much right there at the average minus 0.55%. So we got the numbers for our comparison. If you would be interested in doing a similar analysis on another dividend paying stock yourself, you are able to access this watchlist by following the second link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunity available in the market that I am still missing. So we have checked for all the metrics for each stock and the numbers are in. Now we can start assigning points. First one goes to Caterpillar with the largest dividend yield at 2.49%, a point to Deere with the lowest dividend payout ratio with 17.33%, Caterpillar gets another point with 29 years of consecutive dividend increases, then a point to Deere with the highest 5-year dividend growth rate at 10.53%, and the last point goes to Caterpillar again, with a dividend yield currently 6.2% higher than its 5-year average. So all the points are in and we can calculate results. Deere got 2 points, Caterpillar 3 and PACCAR 0. This means that with 3 points, Caterpillar is considered the winner of this dividend comparison. So it turns out that CAT was a decent pick. I don't need to add another position from the industry, but rather keep on increasing on the existing one. Are you by any chance holding any of the heavy machinery stocks yourself? Share your picks in a comment below. Also, don't forget to support the channel and leave a thumbs up under the video. Now last week I've looked into several other companies, so if you would be interested in any of these, then click on a video that is currently on the screen. And that was it from my side, thank you for watching and I will be seeing y'all in the next one.